How do I find profitable setups every day using these powerful indicators? Market conditions change fast, and if you're not using the right tools, you're trading blind. Every second matters when you're dealing with short-term options. That's why timing isn't just important, it's everything. If you don't time your trades properly, using the right indicators and liquidity analysis, you risk entering too early before confirmation, only to watch the trade reverse, chasing breakouts that fail, leading to immediate losses, getting caught in liquidity grabs where institutions trigger stop hunting moves, missing high probability setups, trading blindly without key indicators. Trading short-term options isn't just about price direction, it's about momentum, volatility, and institutional activity. That's why I use a data-driven system to consistently find profitable setups every day. But finding high probability trades requires more than just spotting a move. It takes precise confirmation. To filter out the noise and avoid weak setups, I rely on a powerful combination of indicators. My enhanced RSI, my enhanced MACD, my phase oscillator, my smart Trendline Pro, and my liquidity grab radar with break of structure. Each tool plays a role making sure I only take trades backed by solid momentum. Momentum is the foundation of every trade, and it starts with RSI. My enhanced RSI. Spotting potential reversals before they happen is critical. RSI reveals when momentum is shifting, helping me anticipate high probability setups. If RSI is climbing from mid-range, making it a signal for a long trade. If RSI is declining from overbought territory, I start watching for a short trade. Simplified decision-making, I use the color-coded RSI clouds. Green clouds indicate oversold conditions, signaling a potential reversal upward, whereas red clouds highlight overbought conditions, warning that a reversal downward could be forming. Mid-level thresholds, 30 to 60%, show momentum building zone, helping confirm trend continuation. But momentum alone isn't enough. I need to confirm its strength. RSI tells me where momentum is shifting, but MACD confirms whether the move has power behind it. A bullish crossover signals buyers stepping in. A long entry. A bearish crossover warns me to stay out or prepare for a short position. The zero line is key. MACD above the zero means bullish momentum, while below the zero indicates bearish control. To make it even clearer, MACD clouds provide visual momentum cues. Green clouds confirm strong upside momentum. Red clouds highlight bearish pressure, warning of a potential downtrend. The size of the MACD cloud reveals how strong the momentum is, helping me gauge whether the move has the force needed for a profitable trade. With the enhanced RSI and the enhanced MACD aligned, I take it one step further to eliminate false signals. Even strong-looking setups fail if momentum is weak. That's why I use the phase oscillator for a final check before entering any trade. Green equals strong buying momentum, ideal for long trades. Red equals selling momentum, ideal for short trades. Magenta equals weak momentum, day out. When the enhanced RSI, the enhanced MACD, and the phase oscillator are aligned, the probability of a winning trade increases exponentially. Even with perfect momentum confirmation, trading against the dominant trend is a losing battle. That's why I use my Smart Trendline Pro indicator to confirm trend direction across multiple time frames. With the Smart Trendline Pro indicator, identifying the clearest trend direction is easy. Many traders struggle because they enter trades against the larger trend. This indicator ensures I stay on the right side of the market. It automatically draws trend lines and breakout levels across multiple time frames. It confirms if the 1 minute, the 5 minute, the 15-minute charts are aligned and in the same direction. It helps me avoid trading in choppy or range-bound markets where momentum is weak. When a price holds above the key trend line with strong momentum, it signals a strong long opportunity. If price rejects resistance and trend lines confirm downside movement, I look for a short trade. Even with all these confirmations in place, I never enter a trade without checking liquidity traps and institutional stop hunts. Market makers and institutions manipulate price to trigger stop losses, absorb liquidity, and then reverse the market. If you're not aware of this, you're constantly stepping into traps. So what is a liquidity grab? A liquidity grab happens when price briefly spikes above resistance or drops below support, triggering retail stop losses. This often tricks traders into believing a breakout is happening, only for price to reverse. So how do institutional stop hunts work? Institutions force retail traders out of positions by driving price into stop-loss zones, creating false breakouts to induce panic buying or selling, absorbing liquidity before pushing price in the intended direction. So how do I know a liquidity grab is a trap and not a breakout? Easy. The break of structure part of the liquidity grab radar indicator confirms that institutions have shifted momentum, revealing the real move before it happened. With all confirmations in place, it's time to execute a trade. Momentum is aligned across the enhanced RSI, the enhanced MACD, the phase oscillator. Trend direction is confirmed across the 1, 5, and 15-minute charts. No liquidity trap, and institutions have committed to the move. Now I take action. If all signals are bullish, I enter a long trade, targeting the next resistance. If all signals are bearish, I enter a short trade, aiming for the next support level. But it's not just about execution. It's also about knowing when to trade for maximum probability. After market opens, I wait for the initial volatility to settle, usually about 10 or 15 minutes in. If momentum, trend lines, and liquidity signals align, I take my first trade. Then 45 minutes after the market opened, institutional traders make their second major move. By now, liquidity has built up, and my indicators reveal whether the trend is continuing or reversing. This is what separates traders who struggle from those who consistently profit. Stop trading on guesswork. Start trading on precision. Use the right indicators. Time your trades with accuracy. Trade with a plan or a system that actually works. If you want more information and see what my indicators do, click the link in the description or the pinned comment below to learn more and get access to my full suite of custom indicators designed to work on the ThinkorSwim platform. And if you're ready to dive deeper into more advanced trading strategies, check my videos right here.